All right. I think we're good.
All right, we live?
Let's get that going. Yeah, I think we're live. Hello, everyone. Happy another day in paradise. Today we have Frank Coto, president of Lincoln Lending Group. And I wanted him to share with you guys the current mortgage market information, what's going on with the interest rates, products for available for buyers, and all that. Frank, thank you so much for joining us. We really appreciate your resource for information. Before we start with the actual mortgage stuff, one thing that I think is very important for all of us to hear is something that based on the unusual set of circumstances we have, mortgage forbearance, and what options, like what people need to know about that.
Yeah. Hey, great question, Stan. And thanks for having me on. Yeah, very, very important. Matter of fact, this information that I received yesterday and I posted on actually saved a refinance loan that we just submitted to underwriting. First thing we'll talk about is the difference in a forbearance and a refinance. A forbearance is basically a delay of your payments. So if you call your lender and tell them you can't make your payments, they may give you, let's say, 3 to 6 months and say you don't need to make your payments, which sounds great, right? But what they're not, or what they're going to tell you as well, not what they're not telling you, is that forbearance most likely is going to be due in full at the end of that term. So at the end of the 3 or 6 months, let's say you had $1,000 mortgage payment, you're going to have to pay $3,000 or $6,000 in one lump sum. I mean, first things first, doesn't make sense, because if you can't afford your mortgage payment now, how the heck are you going to afford to pay everything in 3 months, right? The other way that the banks are doing the forbearance is they're telling you that they could spread out that lump sum, the $3,000 or $6,000, let's hypothetically say, over 12 months. All right, so now you're talking about pushing your mortgage payment up by $250 a month or so. So that could still be an issue for you. In its surface, forbearance is not a good thing unless it's an absolute worst case scenario. Let's compare it to a refi, and then I'm going to jump back and tell you why forbearance is even more scary right now than what we learned yesterday. A refi, you can take advantage of low interest rates. You could shorten your term. You could take cash out. You have a lot of different things you can do with a refi, and people are like, yeah, but how does a refi save me on payments? I'm in trouble right now. Simple. If your lender sets up the refi properly, you can skip 2 months mortgage payments every time. Okay. And most people like you and me, Stan, when we have our mortgage, we're escrowed for tax and insurance, right? Correct. So the lender's collecting the money every month for us, and they're building up this little account. Well, guess what? That bank account that the lender has for you, the escrow money for tax and insurance, gets refunded to you within 30 days of closing. So if that amount is equal to one mortgage payment, which it probably is in most cases.
Yeah, because it's pretty much, we're in the middle of the year right now, almost there.
Right, we're in the middle of the year. Yeah. Exactly. So the account is about halfway to its max. That's probably another mortgage payment. Now that's 3 months worth of mortgage payments you just got without having to repay anything, without having to worry about what's happening in the future. And hopefully you got a lower interest rate, or got some cash, or shortened your term, or did some other move in the refi that makes sense for you.
Right.
So those are the differences. All right. Obviously, I'm going to tell somebody to go to a refi for the reasons I just gave you, but I'm going to give you another reason why you shouldn't do a forbearance. When I posted that video yesterday to all my followers and I told them this, I got a call immediately from someone who we had just locked on their refinance. Yesterday, I announced that one of the biggest lenders in the country called me and told me that all of the lenders are talking right now about making forbearances, no matter if you miss a payment or not, no matter if you come current or not at the end of the 3 or 6 months, they're going to call it a negative event on your credit because there's no payment history for 3 months, and they're not going to let you do a Fannie Mae, FHA, or VA loan for 12 months after the forbearance.
Wow.
That means no refi. That means you can't sell and go purchase with Stan. You're getting nothing for
Frank,
12 months.
Hold on 1 second. I just got a message that they can't hear you. Let me go and make sure that.
Oh.
That's, yeah. Why is that?
We can redo it if we need to. No big deal.
Well, it doesn't seem like you're not muted on my end.
No, it doesn't seem. No, I'm not muted on my end either.
That is weird.
The live, somebody chimed in saying that the live video feed and they couldn't hear me.
Yeah, Jen is actually sending me a message right now, but
Okay,
I don't know why. I mean, I hear you on my end. You're not muted for sure. That's technologies right now.
Hey, it's a new world. We're all doing this. We're working like this. Let's see what her message comes through and says. And if everyone else can hear us, I hope you're enjoying the Stan and Frank show.
Yep.
We're gonna have some
make
good
it
stuff.
work. Let me hold on. Give me 1 second. Just
yeah, go ahead. Take your time. I'm enjoying the beautiful patio after the rain here.
Yeah. Okay. Don't know. I mean, for me, it works well. If anybody else is watching right now, can you type in the comments if you guys have any issues with hearing Frank? Because if we keep talking for another 20 minutes and then there is no
Well, I wonder, is it recording as well?
It's recording, yeah.
Yeah, so maybe worst case scenario, we just have to post it out. Maybe the video is still there.
Yeah, let's do that. Let's just continue. I mean, if I get the recording going on, if we actually have to post it later, we'll post it later.
Yeah, and if we have to do another one, we're happy to come back and help everybody and explain this.
Yeah.
So I'll jump back to the forbearance. So we learned that they're going to make it a negative event. So what this lady had to do, she had just filed for forbearance. She had to call the company and cancel the forbearance immediately. Because if the lender had found out that she had a forbearance, even for 1 month, then they would not let her finish on her refinance. So real important, guys, if you don't know what to do, you got guys like Stan, you got guys like myself, reach out to Stan. You can call me directly as well. I'll give my cell phone number. You guys are welcome to text me, and I can answer any quick questions on your specific scenarios and tell you what I think. But in general, if you can avoid a forbearance and go for a refi, I'd recommend that. The number is 813-765-1239. That's 765-1239 if you wanted to shoot a quick text. What else did we want to do, Stan?
Tell me a little bit about what do we have as current products for buyers. What type of loans are still available? How's the interest rate looking? What's the requirement for a credit score?
So the biggest change that we've seen has been in the government lending sector. For the most part, conventional Fannie Mae loans, your 3%, 5%, 15, 20% conventional loans, those are I would say almost unaffected. Your FHA and VA loans are the biggest problem. Most lenders have gone from a 620 to a 680 or 700 minimum credit score on government FHA and VA loans. Now, I say most lenders because the FHA and VA themselves have not changed the guidelines. Okay, FHA and VA, for instance, VA does not have a minimum credit score. Everybody says, oh, VA has a 620 score. No, it doesn't. That's the bank that has that rule. And a lot of banks have made that rule tighter. We at Lincoln Lending Group work with one particular investor who's owned by a disabled veteran for 20 years, and they have not changed their guidelines. So if you're a veteran, you can still get a VA loan, 100% financing, and you do not have to even have a 600 or a 500 or whatever. We like to see obviously good credit, but we've closed people with 480 credit scores on VA loans, and we can still do it right now. Talking about FHA, same thing. They're raising the rates because the government is the one backing these loans. So if the government doesn't back the loan, then the lenders are scared to lend. So on FHA, same thing. They've raised the minimum guidelines. Good news is one of our investors hasn't. A couple of them actually have not raised the guidelines. We can go down to 500 credit score on FHA. So if you're in trouble, you feel like you don't have any options, here's an option that Stan and I can help you with. You call Stan, you talk about the real estate. Obviously, before you can make an offer, we're going to do a pre-approval and make sure you're qualified for the house. What I'm seeing in the industry is that only the serious buyers and sellers are dancing right now.
Yeah.
Anybody who's in the market is serious. If you're a seller, there were more contracts written in the last 30 days than houses listed in this county. Okay.
We just looked at the stats and the numbers. 1,258 homes sold last month.
Yeah, it's up from last year, right?
Yep.
And we've been in quarantine for a month before that. So
Correct.
Anybody thinking that this market is falling apart, especially where Stan and I are here in Florida, no way. The market is not falling apart. It is strong. Matter of fact,
15.5% lower inventory. What compared to same time last year? We just have nothing.
I was joking with Cindy the other day saying, if it wasn't for this coronavirus, Stan, I would almost think you and I would be out there telling everybody this is a seller's market right now.
Yeah.
Because there's less inventory and there's more buyers. So if you're a serious buyer, get your butt off the fence. And if you're a seller, list your house now. You really should list your house. Call Stan because he's great at listing, obviously, and then I'll handle the mortgage side. But so good news is we still have FHA, we still have VA, we still have conventional. What you don't have right now are the bank statement loans, the no income verification stated investor loans. Those loans are much harder to come by. They're called non-QM loans. Most of that is gone. It'll probably come back within about 60 days. There are some lenders already talking about bringing back bank statements. I think we're going to see a pretty sharp increase in what we can do over the next 90 days. But interest rates are really good now. Stan, you and I have talked about this before. If the interest rate is at 4 and it goes to 5, or let's say it's at 3, okay, because that's about where we are right now. You can get 15 years under 3. You can get 30 years in the low 3s. So let's say your rate is at 3 and it jumps to 4, which can happen in a day, as we've seen it happen last month. That's a 25% increase in your payment.
Correct.
25% increase in your interest is 25% increase in your payment, which what does that mean? If you're on the verge of being qualified, let's say your debt ratio is tight, you just pushed your payment up 25%, which means you qualify for 25% less house. That means if you were a $200,000 buyer, you're now a $150,000 buyer. So it's another reason that we're not trying to scare people into getting in the market, but what we're telling them is the moon and the sun and the stars are aligning for buyers right now and for sellers. You can get a good deal on a house. You can sell your house. You can get a great interest rate. You can still close with low scores. Stan and I are still working.
Yeah, for sure. Last week on Friday, closed on a listing. The sellers are currently that was last Friday. Sellers are currently like 2 days later on Sunday night. She called me. She sent me she wanted to buy an investment house. Like 2 days later, they're going to reinvest the money right away.
Yeah, absolutely. The market is definitely strong. Definitely strong. The rates are volatile. So we got to tell people, you got to be careful. If you're going to refi, we try to run your numbers first, and then we'll kind of wait a couple days and see what the rates do as they go up and down, like the stock market is, and we'll lock in. But like Stan says, there's lots of buyers out there. The programs are still available, at least for some lenders. So just get off the fence. I think that's advice.
What do you guys have as somebody who's looking to purchase investment property for a rental? Not a duplex, not a bigger unit, just a single unit, say, townhouse or a condo or just something, a single family home, but just one unit strictly for investment.
So if you have good credit and we can prove your income, you can do as little as 15% down. A lot of people still think it's 20% down. The truth is Fannie Mae allows 15% down. When I say good credit, I mean probably over 700 credit score.
Right.
And when I say prove your income, what that means is with your taxes, W-2s, and pay stubs, you have to show enough income to cover the existing debt on your credit. Fannie Mae has tweaked out some guidelines about using rent income. Some lenders have adopted it. Some lenders haven't. But for the most part, here's a cool little fact. Let's say, Stan, let's pretend like it's you. So you're the buyer, and you can qualify. By the way, I love the mug. you could qualify.
That's until I get a real car. I'm just gonna enjoy that.
Hey, why not? Why not? So it's called motivation, right?
Right.
So pretending Stan's the buyer. As long as Stan can qualify for a primary residence purchase, meaning as long as he qualifies for the house that he lives in, his debt is under, let's say, 50% of what his income is. Believe it or not, he can buy up to 9 investment properties without making a penny more in income. All right.
Oh, wow.
As long
Good to
as,
know.
right, I know, right. As long as, with one caveat, okay, as long as the mortgage, tax, and insurance on that investment property, the payment monthly, is covered by the lease amount that you're going to get on that rental. So let's say you're going to get $1,000 a month. Fannie Mae will give you 75% of that lease. 75% of that proposed lease they will give you. You don't even have to actually have the renter lined up to go in there in most cases.
Right.
Okay. So if the mortgage, tax, and insurance are $750 or less, and the lease is $1,000, you're qualified to buy that property without showing any additional income besides what you already have. And you can get up to 10 finance properties with us. All right. So you got your primary, and you can do 9 other, 9 other properties, all without having to make more money as an investor. So it's really, really neat. 15% down. I'd recommend 20% down for obvious reasons, because you avoid the mortgage insurance, which is going to be kind of nasty on an investment property, at 15% down. But
I think the investment side is really interesting topic that we can probably make another video sometime and just talk about that, because that's a completely different animal. I call it that way. But I think it's something good for many people to hear, especially people that have current equity in their homes, and they can get some money out of it to put into an investment property. Because I'm thinking it that way. In the current situation, if you are short on cash to make certain payments for your household, say your mortgage, your car payment, whatever, if you have an asset as an investment property that brings you monthly income, here is a money that actually you can use. And you don't have to worry about, hey, what's going to happen if I get laid off from work for a month? I'm not going to make any money. Well, here's the thing. You get 1 or 2 units that are actually producing income for you, and here's your monthly mortgage payment. At least this can save you,
Passive income.
And of course, the more you have, the better. But I'm just thinking that way. What do you think on that?
Well, everybody's got to start somewhere. I've had a lot of people come to me advice over the years. I do private money with my own lending. I do my own investing and have rental properties. And they come to me and ask me, well, what do you got to do? How do I start? I need to have a portfolio of 10. No, you don't. You know what you need to do? You need to start with 1.
Correct.
My first private money loan that I ever gave to anyone was for $11,000. Okay. And most people, would say, well, what are you going to make on that? Well, you make about $100 to $110 a month on it. And a lot of people will blow that off and say, $100 a month is nothing.
But how much is the bank giving you if you have a $11,000 sitting in a bank account, whatever bank account it is? It doesn't matter, even a CD or something.
Yeah. Let's say you're getting 1%. Let's say you're getting 5% interest.
It's still not that much.
No, you're getting nothing. But my point to it is, you got to start somewhere. So you got to buy your first investment property. You have to do your first private money loan. You have to start with something. I like your thought, though, Stan, on if you have equity, which by the way, the stat right now is over 50% of Americans who own homes have over 50% equity.
Which is great. Which is great sign that people shouldn't be scared as much as they were back in 2008, because many people refer back to that time. Everybody now we're going to end up with 80% foreclosures on the market. Well, it's a little bit different thing, because now you have equity. Whatever happened, you can still sell your house without losing money and without owning money to the lenders that you don't even have anyway.
Yeah, it's the lenders who are getting hurt right now by the forbearances and the first payment defaults, people closing on a house and then asking for a forbearance right off the bat. The lenders get buybacks on those, so it hurts them, and they have a lot of cost involved. But going back to what you said about the refi, because people have equity, picture this. You can accomplish all these goals in one shot. You could do a refi, skip 3 months payments, take cash out, buy it or hold it in your bank account while we go through these times to make sure you're safe. And then when we're ready and we're done in a few months from now, you call Stan and you buy an investment property.
I agree on that. Yeah,
Boom,
I agree
boom,
on that
boom.
because that's not something very difficult. As I said, I mean, for me, it's like, people do a cash out refi and they go and buy a boat.
Yeah.
But the boat is not going to make you any money when you need the money.
No.
But if you buy a townhome and you rent it out and, you have like $400 a month in cash coming into your bank account without doing anything. So somebody else is there making the payments for you, bringing you equity in this property, and then you can even take this money and put them back into your own home, pay it all faster or whatever you want to do. I mean, it's really so many stuff that you can do on that.
And look, and as you go, you build your portfolio. And then, 10 years from now, when we have the next crazy thing happens, maybe you've got 5 investment properties and you're sitting on a few thousand a month, that you don't have to worry about if you lose a job or not.
Correct. Yeah. Now, last thing I wanted to ask you, is there anything available for first-time home buyers right now?
Yes. So first-time home buyer programs are still out there. We do have a product. It's a 101% purchase product, but I will say because of the volatility of the market, you're going to have extremely good credit for this loan to price out to make it worth it for you. But that's for a first-time home buyer. They literally get 100% financing, even if they're not a veteran or anything, and they can get 1% towards their closing cost on top of that. So that's your minimum down payment, best thing you can do. You can still do USDA, which is 100% financing. Our regular first-time home buyer programs require 3% down. And they have reduced mortgage insurance, reduced interest rates. It keeps your payment down. So lots and lots of cool stuff. Also, the Greater Tampa Association of Realtors Realtor Care Foundation grant program is going to be back in full swing here in about 30 to 60 days. And that program offers $5,000 to first-time home buyers to help with down payment or closing costs.
Okay.
So there's a lot of cool things out there. What I always tell people when it comes to first-time home buyer is we just start with the application. We do an app and we see what's on the app, how's the credit, how the reserves, do you have the money? And from there, we figure out how we're going to make it happen.
Yeah, because I know the programs are changing. Like, they release a certain amount of money, and when it goes away, it goes away. There's no more. So on that, I wanted to ask you, say they're giving the buyer $5,000 towards down payment assistance. What is the requirement for the buyer in order to get this $5,000? So they get the $5,000, they use them towards purchasing a home. Now, is there any limitations on how long the buyer is supposed to be living there? Obviously, it's got to be a primary residence, but any type of stuff that the buyer should know going towards programs like that?
So on the grant program, the reason I support that program, especially when it gets refunded here shortly, is because they allow me to use my underwriting guidelines. They allow me to underwrite the loan. They don't put any additional restrictions on it. And it's a true grant, Stan. So when you're closed, you're done. It's your money. If something happens in 6 to 12 months and you have to sell or move or something like that, you don't owe the money back. Compared to some of these down payment assistance programs like the state bond and things like that, I don't work with those, to be honest with you, for the reason that they put restrictions on my underwriting. They make people take higher interest rate and higher fees. And then if you don't sell it or you don't keep it for so many years or blah, 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 you have to pay back a portion or the whole thing depending on how long you've kept it. It's basically like a second mortgage. It's kind of trapping you. So I know they have their purpose and they help some people. I'm not a huge fan of them. I prefer the grants that allow no restrictions on us and they get free money at the end.
Yeah, that's the reason I ask about it because, it's just the completely normal thing. First-time home buyers, they have this mindset that they have to get a first-time home buyer assistance. Right. And, as I said, different programs are changing all the time. And I like to tell people, sometimes nothing comes for free. Nobody's going to give you money for free. There's got to be something. So you need to be aware what is the lender actually giving you for the money that, take the 10,000. Everybody's going to take them. Just give it to them.
Sure.
But then what are you going to do after that? Like, as you said.
If you're thinking in the long run, they're not good for you. What I always tell people is if you can get 3%, even if it's a gift from your family member or something like that, if you can get that 3% down or 3.5% down, you are in so much better shape than if you use any of these down payment assistance programs. So I would always encourage someone to try to do that, because you're going to get a better long-term mortgage, a lower interest rate, lower payment over the life of the loan if you don't have to borrow money from the second mortgage companies.
Great.
Yep.
Okay. Maybe sometime next week or so, if there is any major stuff going on, updates, we can talk again.
Yeah.
Hopefully the sound of this video actually works.
Yeah. Hey, you know what? We're going to find out in just a minute. If not, we're going to come in and we're going to dub me over everything I said.
Right. Exactly. Okay, Frank, thank you so much.
Guys need me. Yeah, Stan, thank you very much. If anybody
I really
needs, they just
appreciate
go
it.
to 813mortgage.com is where they got to go. If they need to apply or they want to call, they can call 813mortgage and drop the E, and we're going to try to drop the fee for you. And Stan, thank you so much, man. You're a great agent, and I appreciate everything you do.
Thank you, Frank. Talk to you soon. Bye.
Bye-bye.